Morning, top of the morning, back at it again with another one. And today we're looking at the Nasdaq. Nice price movement yesterday. Not bad at all. Took a few points. If you didn't watch the previous video we put up, be sure to check it out. Just a bit of context. 3 time frames that we're looking at right now. This chart here is the 1 minute. Let me just change this. That's the 1 minute. This is the 5, and this is the 15. So, building on the idea from yesterday, looking at the M15 quickly, just gonna zoom into that. We had the daily range from the candle on Monday, that massive expansion move we had on Monday. This is the high made on Monday. This is the low made on Monday. Currently, this stands as the low of the week and the high of the week. We got news on Tuesday. We waked up, but we didn't cross that level as the high of the week. And then yesterday came, or today rather, which is a bank holiday, so I don't expect much to really be going on. Probably just some consolidation, building more buy side, and then we'll see what happens tomorrow since we have a red folder news driver event. But in the context of the trade we took yesterday, that was the range we were looking at. TP was the midway point of the range. So the news came out, we got us wick up to the upside, a whole lot of consolidation, and then we price sank. We were able to get involved in this price movement to the downside. So we're just gonna start off by running through the trade yesterday. I'm gonna put this fair value gap over there. Just running through the trade. Had the fair value gap set up. Obviously, as you know, we are only trading the silver bullet model. So we look to enter in a fair value gap after liquidity has been run and target an opposing pool of liquidity or an efficiency or a higher time frame draw that we have identified. Once the liquidity run occurs and a fair value gap has been formed, we'll look into taking an entry during the times of 10 a.m. to 11 a.m. That's what happened yesterday. So I'm gonna switch time frame. We have this higher time frame M15 fair value gap. Just take a note of that. And then now I'm gonna move over to the 5-minute time frame. Here we are on the 5-minute time frame. I'm just gonna mark out market open, so 9:30, and let's take a deeper look. Now, as you can see, at 9:30 we had the candle there. 9:35 we tapped into that M15 fair value gap. Price rode down and it came up again, but the second time, or the third time rather, you see it didn't breach this and it just barely tapped into that M15 fair value gap. Move it over to 10 a.m. 10 a.m. comes through. You see, broke that short-term high. Initially, I was expecting a buy, but then look what happens. Price closes straight through, goes right through that fair value gap and closes. It's now inverted, and you can also see there that gap over there, that gap over there. But I was primarily focusing on the inversion fair value gap. It came back up, printed the doji, began to sell off. The price movement that we saw was about 62 points, not bad. Oh, this is another position I got on. Let me just move that. Let's not mind that right now. That's more of an afternoon session trade. Anyway, so tapped into that inversion fair value gap. The bearish doji gave me confirmation, or gave me more confidence. Shout out to the Candlestick Trading Bible, and we sold off. Like I said, the target was that halfway point of this price range. We didn't get that. We took out that pool of liquidity. I saw an interesting quote that says, if it's a previous day's range and you're bullish, you ideally don't want to see price or the next day's candle trade to the 50% level of the previous day's candle. And that's exactly what happened yesterday. We didn't trade down to the 50% level. We just traded down and then proceeded up. That's ideally what we'd want to see. So very simple. Wick up, took out the buy side there. Short-term low broken, strong close beneath it. Tapped into a higher time frame PDRA, broke another short-term low, came back, could barely get up into the PDRA. I don't know if you can see how it hasn't even touched it, that space that exists over there. It's giving to me an indication that price is pretty weak. Our window comes in 10 to 11. Let me just put the 11 o'clock. See that 10 to 11? I just like how at 11, that's when it's, attacking that level of liquidity. Apologies for that. Slight technical error. So, the model played out yesterday. Silver bullet. Inversion for value gap. This now becomes the order block. Hit it, go down. Simple as that. Simple as that. Thank God for the skill. Hope this short video just opens up and just, will serve us well later in the future. Just a point of note, this is for me personally, but if you find value in this, bless up. My trades yesterday weren't informed primarily, I was framing my trades off of the M1. So there was a lot of imbalances and levels that I was participating in that got me chopped up. In future, I should rather just focus on the M5, M15, and the M1. As I found that fair value gaps off for the 5-minute or 15-minute are much stronger than the M1 fair value gaps. Although the M1 fair value gaps or the M1 chart in general does allow or show what price is likely to do, or it gives me an indication on direction much quicker than the other higher time frame charts. But higher time frames are parent. Ooh, excuse me. I'm sneezing. Higher time frames are parent. So moving forward, I must just remember that. Thank God for the skill. Thanks for watching, and more videos soon.